Welcome back, folks, to a deep dive into the financial universe of Johnson & Johnson. Buckle up because we're about to take you on a wild ride through numbers and metrics that'll make your head spin faster than a theme park thrill ride. Let's kick things off with some serious stats. Picture this. Johnson & Johnson's price-to-earnings ratio at trailing 12 months stands at 13.86, cruising just below its 5-year average of 17.07. And the P/E ratio FWD? A cool 13.84. But hold on to your hats, because the price-to-earnings-to-growth ratio comes in at 2.89, hinting at some potential growth opportunities lurking around the corner. Remember that a value around 1 is when a stock can be considered undervalued. Ever wonder who's steering the ship behind the scenes? Insider ownership may be a modest 0.16%, but hey, it's the quality, not just the quantity, that counts. Now, let's talk about returns. Johnson & Johnson's return of equity? A jaw-dropping 18.57%. Return of assets? A respectable 7.62%. And return of invested capital? Hold on to your popcorn, folks, because it's a whopping 23.18%. These numbers indicate how efficiently Johnson & Johnson uses its shareholders' equity and company assets to generate earnings. Speaking about earnings, the earning per share or EPS, the heartbeat of any stock, comes in strong at 10.46. But wait, there's more. Analysts predict a healthy EPS growth of 4.8% over the next 5 years. And guess what? Johnson & Johnson's been flexing its muscles with positive EPS evolution, boasting a compound annual growth rate of 5.71% over the last decade. Speaking of evolution, while free cash flow per share may seem flat with a modest 2.79% CAGR over the last 9 years, Johnson & Johnson's cash flow game is anything but flat. With a dividend yield of 3.39% and a whopping 6.07% dividend growth over the last decade, it's no wonder they're crowned as the dividend king with 61 consecutive dividend increases. But what about the nitty-gritty of operations? Johnson & Johnson's operating margin stands tall at 25.66%, while its profit margin smiles back at us with a charming 15.23%, indicating how efficiently it turns its revenue into earnings. Despite a slight hiccup in revenue and earnings last year, Johnson & Johnson has been painting the town green with positive growth over the last 8 years. However, despite this consistent growth, the market price of Johnson & Johnson has not reflected this positive evolution, obtaining a total return lower than VO during the last 5 years. So, what's the bottom line? With a debt-equity ratio of 0.44 and a long-term debt-equity ratio of 0.39, suggests good financial health, and Johnson & Johnson stands tall with a market cap of $355.66 billion. And even though the market may have hit a rough patch, with a minus 12.76% average price return over the last 52 weeks. Finally, analysts are still bullish, predicting a juicy upside of 20.89% in the next 12 months from the current price of $145.01. And if you asked me, with a fair value pegged at $171.37, there's no denying that this healthcare giant might just be the golden ticket you've been searching for in the stock market jungle. Thanks for joining us on this whirlwind adventure through Johnson & Johnson's financial galaxy. If you enjoyed the video, don't forget to like, share, and subscribe for more financial adventures. Until next time, happy investing.